This is Eric Moore with Mother.com, February 6th, 2020, and we are now showing a breakout on the S&P 500. But let's begin here with the weekly. So right now, I would say the main thing to focus on is this breakout that is taking place on the S&P 500, and that should give us some guidance. So I'll give you the number there, and I think that's the immediate level to watch, because this market's health is going to be determined by whether we are still holding above that threshold or whether the market is struggling to hold above that breakout level. And that level for the S&P 500 is 3,329.62. So that's the previous weekly closing high from January, and the market needs to hold above that level if this breakout is to continue. We also need to see the RSI on the weekly hold above 69.1. Now, as long as the market is holding above these levels, then clearly this is an outright very fast pace to the upside bull market. And if we end up seeing that this market is struggling to hold those levels, and if we see a pullback below both of those levels, in other words, if the price is back below 3329, and if the RSI fails to hold above 69.1, then chances are this market is due for a pullback. In other words, the breakout needs to continue being healthy. So while I'm here on the weekly charts, let's take a look at the Dow. And here we can see the Dow also doing its best to break out. And the number there for the Dow that it needs to hold above is 29,348. Yeah. 0.10. We need to be above this number if this market is truly going to continue its pace to the upside. Now we can see the Dow is struggling a little bit. It's not near 69.1, but this number should be the guide. Now let's not forget that the NASDAQ itself is actually the leadership here because it is well above its weekly breakout level. Keep in mind, we've already had the minimum required weeks of rest, which is 2, being the lowest. In other words, this is a legitimate fresh breakout after a good rest period. And so the NASDAQ, as long as it is breaking out above 9,388.94, this is a very good market to the upside. And also we can see that the NASDAQ is well above 69.1. In fact, we can say it never really gave up that level. So this is probably the most bullish of the 3 major averages in the US. And if I was to briefly touch on the monthly charts, because I did mention that, I believe, on Monday, you can see the NASDAQ still holding above 69.1. That is very, very powerful. Let's take a look at the Dow on the monthly chart. We can see again, as far as the price breakout on the monthly is concerned, the Dow is also breaking out, and as long as it is holding above the prior monthly closing high from December, that is 28,538.44. As long as we are above this number, this is a very powerful market. And usually when a market is breaking out, and especially if the Dow can still hold above 69.1, right now we are seeing a little bit of a struggle. It is not above 69.1, but if the Dow can reclaim that 69.1 threshold, man, this is a market that is actually potentially looking to go into a hyperbolic move. Generally, that's what happens. So instead of going in this type of an uptrend, when you're breaking out and holding above 69.1, if you hold above 69.1, that's the look. You start picking up momentum, and generally the strongest moves would look like a hyperbolic finish. Now, take a look at the SPX. This is a very good breakout as far as the S&P 500 is concerned. 3-2. Let me start over again here. So the breakout is already in play. That looks very good. And of course, the level to watch is the prior monthly closing high from December. Is at 3. So that's the number. As long as we're above that number, this is a very powerful market. And of course, we are trading above the 69.1 threshold. Again, as long as that's the case, I really need to emphasize this. There's a good probability, as long as all of these breakouts are taking place, the RSIs are holding above 69.1. This market has been going higher in this pace. But the more we hold above 69.1, the more we're going to pick up pace and momentum. It's going to look like a hyperbolic move, as long as all these things are remaining the same. Now, the reason for the video is from a short time frame, and we're going to go take a look now at the daily as far as the S&P 500 is concerned, and just give you a little bit of a look and how the internals are looking. Really, we shouldn't try to go against this strong market as long as those breakout levels are taking place. We need to refrain from those types of strategies. So we can see here the prior line of support could be, or could end up, I should say, being resistance. Now, of course, this is just pure speculation, right? Oh, by the way, a good quick learning lesson for those who are new. Notice this double bottom RSI 50 support has led to what I always mention is generally when you see that happening, that RSI 50 holding with uniform action, what that tends to mean is there's a good likelihood that you are actually now setting the stage to come and test prior highs or improve on those prior highs. And here we can see we've already done that. In fact, it happened very quickly. But what I'm talking about here is now there's this view, this potential view here, that this could end up being a resistance area on a short-term basis. And so sometimes you just kind of have to let these things play out instead of being aggressive all the time. If this ends up being resistance, then of course the market is due for a day-to-day pullback, which means the same instruments we are looking at from a breakout perspective might also be had at slightly lower prices. Now, pullback doesn't mean that the market is gonna collapse, but it could be the beginning of a collapse. We don't know that until later. Now, I'm drawing this line here to emphasize that recent pullbacks on this 1-year daily chart for the S&P 500 have come with a break below this area here and a break. Resistance here give us those highs, we got a pullback, and resistance here we got a pullback. So resistance here on a daily, if it happens, would suggest to me that yes, now the market is looking to point down. And of course, if those weekly breakouts fail, be on the lookout for a massive reversal. Take a look at the S&P 500 from a 2-hourly standpoint. And again, let me refresh that chart here. And on this 2-hourly chart, by the way, so just we can know where this chart is being drawn. This is the general market right here. S&P 500 trading at 33.45, give or take. And I just want to draw a couple of lines on the 2-hourly, which could be telling us that around here there's going to be a little bit of a struggle in the market unless it can clear it, if it can clear it. So there's this backtest line, line number 1. Then line number 2 is this breakpoint recently. Now that breakpoint did give to a short-term pullback. So this breakpoint right there, we take that and draw the uniformity line, something like that. And we can see that we've already stalled on this level once in the near term here, which is this highs here. And now here we are again, back to test that blue line. Keep in mind all this is taking place conveniently around that RSI 61.8 on the 2 hourly. And then I can draw another line, which is the RSI topside resistance line. So from a short-term perspective, this is the current challenge. It's only a challenge. If all this end up giving resistance, then clearly this market is due for a pullback. We don't have to be very aggressive around here. And since the lines are well defined, all the market needs to do is take out those 2 lines or those 3 lines, and we continue advancing this market. In conclusion, remember the line from previous videos, I think about 2 weeks ago, maybe even more than 2 weeks ago. This is the line that gave the recent support on the market, and that line we were watching did come in play. So as long as the market is still finding and holding, in fact, as long as the market is above this black line, the market continues to be healthy. You can have pullbacks all day, but there'll be healthy pullbacks. It's only when down the road at some point when we break below this line that we can start really anticipating a major move lower. But right now we are ways from that black line. Any pullback is healthy, but remember, pullbacks can just be ordinary pullbacks, or they could be the beginning of a major move. We don't know until later. And also, we don't know until later, for example, until the S&P 500 breaks the RSI lows line. So that is also something we can't tell right now. Only time will give us that look. It's only when we break this trend line on the daily, and that break would have to be material, not just a shallow break and then a recovery. It would have to be a sustained break and movement lower that would give us what I would potentially believe would be the beginning of a bear market. But right now we are ways away from that. This is Eric Mwathe with Mwathe.com. As always, good luck, peace and blessings. E-A-C-S.